Cool. Hi, James. Good to have you on the call today. Can you just introduce yourself, say a few words? You and I have worked together for a long time, haven't we? Must be like 15 years that we've worked together throughout Geneva, UK, and other more exotic places. I know you're in Verde now at the moment on a trip. Appreciate you taking the time out of your day to chat with me about UK topics. But yeah, just to tell the audience a bit about yourself.
Yeah, sure. I think we met, it would have been around 2011, 2012 in Geneva. So I'm a UK solicitor. I sort of trained at some well-known firm, and I was partner in a London firm for a few years. And part of that time, I was head of the Geneva office. So that's when we met. And throughout my career, I've been involved in advising quite a wide variety of clients, from the traditional UK sort of estate planning, wills, trusts, inheritance tax clients, but always then both the more sort of entrepreneurial, corporate, private equity clients who needed more sophisticated tax structuring advice, and also international clients, whether that's being in the UK, all of the non-doms who would come and live in the UK, or the people who weren't even resident in the UK but would have their property in London and would spend part of the time in the UK. And then I suppose especially with my Geneva time, then either British expats around the world or other international clients who just have some touch point with the UK. And then sort of purely international work where either there's trusts. So I think historically, people always came to UK lawyers for advice on trusts, whether those trusts were in Jersey, Guernsey, Caribbean, and so on. It's probably less the case. I think the offshore law firms have changed significantly over the last 20 years. So they are often also now the first port of call, and also trust knowledge in other jurisdictions around the world has developed. But I think still, as a sort of English lawyer, we have an affinity with trust law. So I spend a lot of my time advising trustees in Jersey, Guernsey, Switzerland, and also advising international clients, probably often now from the Middle East or from Africa, who want to set up a trust as a way of holding and protecting their wealth. And you look at all the cross-border implications from succession law, property law, tax law point of view, and sort of designing the structure.
Cool. Do you know, I've just remembered, did we meet during the LDF days? Do you remember that? The Liechtenstein Disclosure Facility days? Did you come over in that wave?
I think it's interesting that the work you do is often driven by geopolitical events and political in those sort of the 2011, 12, 13 period when I was in Geneva. A lot of my work was driven by the fact that the UK and Switzerland did this deal where essentially that Switzerland was going to report all UK account holders to the UK. But there was, the Liechtenstein Disclosure Facility, which was an arrangement the UK put in place with Liechtenstein.
It was a mad arrangement, wasn't it? It was a whack over the head for Liechtenstein, but then to disclose, you had to open a bank account there, and then you got a better deal, didn't you? Was that? I remember it was like the crazy. They somehow managed to steal victory from the jaws of defeat a little bit, didn't they, in Liechtenstein?
Yes, because it started off, the point of it was that the UK was cracking down on people that are hiding money in Liechtenstein. So it was right, you're going to have to come clean. So there was an arrangement by which people who had money in Liechtenstein could come clean. But then it whether by accident or design, I think it was by accident, and then they just realized that it was quite a helpful way of getting more people out of the woodwork. They said that even if you had nothing to do with Liechtenstein historically, if you set up an account in Liechtenstein, even of a small amount of your funds, you could then declare all of your, regularize all of your undeclared UK tax liabilities through these really beneficial terms in Liechtenstein. And then there were also some aspects of the beneficial terms in Liechtenstein, which I think were also by accident rather than design. But it probably, as a, it was only for a limited time period, and I think it brought a lot of historic undeclared wealth back into the UK tax radar.
Yeah, no, I remember. Because I was running SAFRI office, wasn't I? SAFRI Champion's office in Switzerland, and I think we helped the final client. I think he got in the last hour or something. As ever, one of those gentlemen. So yeah, I remember that. I remember those days fondly, and had a lot of great people like you come over. Switzerland was sort of buoyant with fresh advisors because there was all that, as you said, demand to tidy up the money that was in the country. Of course, FATCA came around in 2012 as well, didn't it? And then CRS. It was all that period was all really happening, wasn't it? And with tax disclosures.
Yeah, so I think it was interesting to see the mentality. Obviously, the other backdrop to it was the US DOJ action against Swiss banks. And I think, there was this strong mentality in Switzerland, which was cultural as much as anything, about confidentiality and privacy of client data, and also sort of their own sovereignty in whether people can have their assets looked after in Switzerland, and it's not the business of any other country. And the reality of the world economy and politics and the importance of the US to Swiss banks and so on just meant that wasn't ultimately a realistic viewpoint people would hold on to. And I think there was a period where there's a lot of denial about that's the way the world was going, but it is the way the world went. And then, I think obviously FATCA and CRS, again, there was a lot of complaining about FATCA. FATCA, but also, in particular CRS. I think also just because it was a bit of a nightmare in terms of having to just do all the admin and the analysis that went with it.
Well, trying to understand it in the first place was
exactly the rules,
wasn't it? Yeah, I mean, the amount of hours that were spent trying to actually understand it with all the crazy definitions and was a challenge.
Yeah, and how it applied to trust in particular. And then obviously it adds a compliance cost for the clients because all the service providers will be spending more time having to deal with that. That's an additional cost that the client's going to be charged. So then the cost of running structures becomes more. So is it worthwhile running the structures? So you get a lot of the smaller structures sort of get flushed out of the system, wound up. People probably, it's a general trend of a move to quality in terms of the types of services and structures that are being provided, which is a good thing. In Switzerland also, obviously now, trustees require a license regulated by FINMA. That system's still working its way through in terms of people's applications being approved. But I only saw the other day FINMA sort of declared they've already been going after some trustees and asset managers for non-compliance, which I think is something that I think there's an element of be careful what you wish for with this trustee regulation in Switzerland, because it was partly driven by some of the trust companies, I believe, that trustees should be regulated in Switzerland.
Yeah, no, it's a disaster, right? You're right. It was the Swiss Association of Trust Companies, wasn't it? That they were pushing for this, and their view was we need to demand it because, and then we can shape it how we want it. Because if we let the regulator do it, they'll bring in something that doesn't work. But I think everybody agreed was that actually it's kind of a total mess. So it didn't work. And so yeah, what's your view on that?
Yeah, well, I mean, I think so. In the UK, for example, trustees are not regulated, which is interesting. Um, not as trustees, they they may be regulated in various different ways. For example, being subject to anti-money laundering regulations, or if they are a bank, or if they are a if they are a law firm, then they're obviously subject to certain types of regulation. But simply being a trustee or a trust business is not something that subjects you to a broad sweep of financial services regulation.
Mm.
And obviously in jurisdictions like Jersey and Guernsey, that kind of regulation is already in place. And yeah, there's and it makes sense in many ways that these firms which are holding significant assets on behalf of clients and actually have discretion as to how they deal with them, don't always have to provide huge amounts of information to the people that they're holding those assets for, should be subject to regulation. Otherwise the client, a beneficiary of a trust, is reliant on legal action to bring a trustee to account, and that's an expensive, arduous process to go through.
Mm.
So having regulation of trustees does make sense, but it also introduces a lot of risk for trustees when they don't get things right, or I think where they have got things right, but someone wants to have an argument with them. So what I'm interested to see is whether the regulation of trustees in Switzerland opens up a new avenue for disgruntled beneficiaries to challenge trustee decision making.
Yeah, that's interesting. Yeah, I mean, I tried that once. So I was representing a trust we'd taken it over from a Jersey trust company, and they had clearly, in my mind, stolen money from the trust. They'd overcharged to an insane amount. We're talking tens of thousands, basically because they were trying to pump their revenue up ahead of selling their business to a private equity company. So how many times have we seen that? And this family lost about 100,000, and of course they had all the excuses for why they had to charge those amounts. And we discussed legal action, and yeah, we looked at the regulator, and we looked into the Jersey regulator, and there was an ombudsman. But yeah, I mean, no, we were completely stonewalled. That was doing everything it could to not listen to us or take. And in the end, we could see there was no. It was a fake regulator, almost fake ombudsman. So my view on regulation is that yeah, maybe it's effective in stopping overly commercial people taking on clients they shouldn't really. I think it has stopped that, but I think the actual effectiveness of the regulator is minimal. Most of the time, it just creates so much work that isn't value adding to clients, and adds cost. And the actual way that the regulator acts is they just outsource the audits to an accountancy firm who normally send a load of 21-year-olds in trainees to do the audit. who completely misunderstand everything and just waste everybody's time. So I'm sort of quite anti-regulation, really, because I don't think and it just is sort of a beast in itself that just gets bigger and bigger and bigger and bigger once it's started. So I'm not very hopeful for the Swiss thing. I think it was perfectly balanced here before. They did have the AML regulation for trustees. That was working quite well, so people had to be very careful what they took on. They had to monitor transactions, do reports to the authorities if anyone was suspicious, and I think that was fine. And so, yeah, I think the Swiss Association of Trust Companies, who I suspect they wanted to be the regulator themselves, not FINMA.
Okay.
But I think, the politics is a lot of the independent regulatory bodies here, and I think they were fighting for their survival. And then you've just ended up with this thing where you've got FINMA doing one bit, a regulating body doing one bit, and the trustees are actually all lumped in with the investment managers, which are two completely different businesses. So I think, yeah, total disaster. I don't think it's going to help clients. I doubt there will be any way that they can get recourse for a regulator. But there we go. That's happening in every jurisdiction, isn't it?
Yes, I think that the reputable trustees thought bring in regulation and it will get rid of some of the cowboys and the people that are up to no good or don't know what they're doing, which is fair enough. And I do, as I said, I think regulation. Yeah, I don't agree with you that regulation is per se a bad thing. I think there's a role for regulation in protecting clients. But I just think it's going to be interesting how it pans out in Switzerland, because FINMA has gone to great lengths to understand trusts, but applying financial services regulation concepts and concepts that apply to investment managers and custodians and so on to a classic trust scenario isn't that straightforward. And as you know, often the question with trusts is a trustee can make various different decisions. They have duties to their beneficiaries, but it's not black and white what is the right thing to do. They have to decide and then live with that and be ready to defend it. And I think that is a legal concept which is best tested by trust law, and if you need to, you have it out in the courts. Trying to regulate that decision making with effectively financial services regulation could be problematic.
Yeah, and that's the point, right? Here, like if you're in Jersey or Guernsey, they don't have big banking sector, right? It's the trust sector is their big industry. Here, FINMA's got a very, very big banking industry to regulate, right? And they're very busy and overworked on that. So the fact that they, I don't know, felt they had to get involved in the trustee world, I think we were fine as self-regulating. I really do. But let's see. Yeah.
At the same time, I mean, related to that is the whole Swiss trust law idea.
Yeah, which that got sort of thrown out, didn't it, in the end? Yeah.
Yeah, which again is a sort of, I think, again, be careful what you wish for, because it was, as far as I can see, very much promoted by lawyers and
it was more the Swiss lawyers, wasn't it? It was the sort of Swiss. It was actually like the Swiss lawyers who market to the trust industry were pushing for it, right? But again, like
yes,
we've seen, there's been terrible cases where you've had. Remember, one of the courts in Geneva, for some reason, felt it had standing to rule on a trust case, which was under a different governing law, obviously, made a complete hash of the judgment. So you could put the law in place, but it's still courts who are unfamiliar with these concepts that are going to be trying to adjudicate on it, right? So I thought I didn't think it was a good idea. I felt that the industry was just doing fine, serving clients from here with the Swiss high level of administrative and standard of how only the Swiss know how to serve wealthy people. but using the common law. So I thought it was unnecessary. I do see that they're talking about changing the foundation, though, aren't they? Maybe that's a better way, that you can just loosen the Swiss foundation is obviously very quite restricted and strict. So maybe that was actually a better idea, was to just make that more of a flexible vehicle. What do you think on that?
Yes, I mean, I think then at least you're dealing with a structure which the Swiss legal system has a sort of innate familiarity with. But we'll see what happens with that as well, because I think the thing that happened with the trust law is that it brought into focus the way in which trusts are taxed in Switzerland, which has and there's been a sort of a consensus and understanding of essentially offshore trusts in Switzerland, where you have a Swiss trustee, but everyone else is outside Switzerland. So it's been a comfortable understanding that that's not coming within the Swiss tax net. And of course, it's a bit of a Pandora's box as soon as you start.
Well, that was always quite clear, actually. That was quite black and white in the law, exactly, that as long as none of the beneficiaries or settlers were in Switzerland, there was no tax. It was the underlying companies that were causing a problem. There was a big grey area on, well, if you're running a BVI company here, is that tax resident? I remember we once managed to get a tax ruling in Geneva that the trusts were and the underlying companies were not to be taxed. And it was quite funny. I was at a conference where somebody was saying, "Oh, the Swiss would never give out a tax ruling on that topic," and I was like, "I've got one in my drawer back at my office," But yeah, I think you're right. It still was a bit of a grey area, wasn't it? And still a bit of a risk, maybe. But
yeah, no, I've advised a client, which is a small trust company, where they looked at this very conscientiously and said, okay, we've got all these BVI companies that are owned by our Swiss trust company, and they got a report done by one of the big four who said, well, yes, there's a theoretical risk, or even possibly a better view that these are Swiss taxable entities. However, common practice and general acceptance by the Swiss tax authorities is that in this situation they're not.
Yeah, I think, I mean, Geneva as well as I do. I think if you went down to the Geneva or Zurich tax office and tried to get a tax number for a BVI company, they would take the piss off, wouldn't they? They wouldn't. So I think unless it's got a lot of Swiss people around it, residents, I probably would be okay saying that, that should still be okay here.
Yeah.
Maybe just a final point on this quite interesting discussion we've ended up having on the Swiss landscape. But one of my observations was that because of the whole regulation thing, and perhaps the knock-on effect that's meant on the ability of trust companies to give good service and the amount they charge, is that people are just setting their own family offices up now. We're just going to do it ourselves. So I think that's been one of the knock-on effects of bringing that regulation in, is clients now like, well, you guys are so useless, we're just going to club together and do it ourselves. Have you seen any of that?
Yes, and also sort of rise in private trust companies. So structuring, so you might have a professional trust service provider, but setting up private trust companies for the clients, then there's a small leap. So then, well, calling that the family office. But then I saw the other day that in this recent FINMA announcement, they're going to bring some of those within the scope of the regulation on the basis of the amount of assets they're holding. So
yeah, they put the value right down, I think, haven't they? From, I think it was 50 million down to 5 now. So yeah. Cool. Okay. Well, the main reason I wanted to talk to you was about UK tax, but I forgot how much you knew about Switzerland, so that was quite interesting. um, yeah, let's talk about the UK then. I'm from Jersey, obviously, and whenever you work in a trust company in Europe, I think it was very hard to not have some structure that was a UK tax planning structure. UK, I guess it was two things that happened, wasn't it, in the 80s and 90s, was them liberating all the financial markets and London just becoming this massive financial center. And then obviously they created this thing called the non-dom rule, which if I was to simplify it, and you can correct me if I explain this correctly, but the non-dom rule was simply you could earn as much money outside of the UK as you want, and you would not be taxed on that. You'd only be taxed on what you earn in the UK or that you brought into the UK. And for a lot of people around the world, that was a fantastic deal. They could come and live in a place. Okay, the weather's not great, but you can do everything you want there. You can do all the business you want. You can raise money there. You've got great talent. And it was just a great place also that your families didn't mind living in. Wives tended to be happy there as well. They could have a good social life. The kids could be well educated. And so it was just a fantastic deal. And also because of the demand, London then sucked in kind of all the talent from Europe, didn't it? From Spain, Germany, France. So you had all the best of Europe in London. But that's changed, hasn't it? And they put a sort of a fee on that you after a few years you had to pay a certain amount to have that status. Then there was a cap on when it expired. So after I think it was 18 years, isn't it? The whole effectiveness of it disappeared. But yeah, maybe just can you tell us your views on the non-dom rule? What's happening with it? Is it going to go entirely?
Yes.
Or still a good deal for people?
Yeah, well, so the non-dom regime that everyone hears mentioned a lot, it has its origins back in times of empire, and it was a concept that British people had gone off around the world, working in the empire or living in the empire, but still having ties to the UK, maybe still coming back to the UK, and it was just this idea that what money you had outside the UK was not taxed in the UK. It evolved over time so that it became limited to people who were not from the UK originally. If you had a non-UK domicile, if you moved to the UK, you could live in the UK without everything that you have outside the UK in your home country or elsewhere, or immediately becoming within the scope of UK taxation. So so I think that combines with just UK and the London's role as a international centre, again going back to times of empire, but the London in the 70s, 80s, you have a lot of Middle Eastern individuals who've always spent quite a lot of time in London. As you're saying, the financial centre of the City of London, especially in the 80s, absolutely exploded. In terms of relationships with the US, London's the natural go-to place. Coming to Europe, within Europe, it was the financial center, even surviving the creation of the euro to a large extent. And so, for a long time, the non-dom regime operated in a pretty straightforward way, and also quite, very undoubtedly extremely beneficial for some people. So, classic cases: you move to the UK, whatever you earn in the UK, in your job in the UK, or any other income you have within the UK, like rent on property or dividends from a UK company, you pay UK tax on. Anything you have outside the UK or earn outside the UK, you will only pay tax on if you bring that money into the UK to use it, spend it in the UK. Then there were various, the other aspect of that is the inheritance tax. So if you were a non-dom living in the UK, in fact, if you're non-dom living anywhere in the world, but even if you're living in the UK, only your UK assets would be subject to UK inheritance tax, and assets outside the UK would not be subject to inheritance tax. And then with those fundamental rules, there was planning people could do so that certain individuals who were extremely wealthy, they could move to the UK, and if they were careful to not earn anything in the UK and structured their assets outside the UK in a certain way so that they never brought any income or gains into the UK. They just
oh yes, this is the clean capital, isn't it? The clean capital.
Yeah. So if essentially wealth that you already had before you moved to the UK could in future be brought to the UK without being taxed. So if you could keep that wealth that you already had separate from new income and gains that you earned after you moved to the UK, then you would have this pot of clean capital that you could use to fund your life in the UK. So it was a well-established regime, and always over the years, to some people it has an inherent unfairness. Why are all these? Why are foreigners, and maybe particular rich foreigners, able to come and live in the UK and not pay any taxes, whereas sort of good, honest, hardworking Brits are paying all the tax? So it has an apparent unfairness, which means it's always open to political challenge. But what's tended to happen is that those lobbying on behalf of the non-doms have generally persuaded governments that it's not a good idea to get rid of the regime, and even there's been political compromises where the regime has been limited in various ways, or as you say, I suppose the biggest changes were, firstly, they said that after you've been in the UK for more than 7 years, you have to start paying a charge to access the regime.
It's about £50,000, isn't it?
Yeah.
Yeah.
And then after 18, so then they changed it again in 20, or announced in 2015 that after 15 years in the UK, in theory, you no longer not have access to non-dom regime at all. But at the same time, there were even if you've lived in the UK for 15 years, it's not necessarily the end of the story.
If you're structured, you can still drag it out, can't you? If you had a pre-planning structure, yeah. And if the trustees hadn't ballsed that up with the mixing the capital and income gains and the accounting and that sort of thing, right? Or tainting the trust by letting new additions in. I mean, trustees certainly earn their money when they're running one of these trusts, because if they make one mistake, they can ruin the whole tax planning, can't they? But yeah, so where is it now then? Is it still attractive, do you think, or are people still using it, or?
Yeah, I think too much importance can be given to the non-dom regime and whether it continues or not. I mean, I think that the current state of play is that Labour have said that if they win the next election, and it's widely assumed they will win the next election, they are going to get rid of the non-dom regime. That's the headline. Now, in theory, that would mean that everyone who is a UK resident will pay tax on the same basis, which is that you pay UK tax on your worldwide income and gains. We will have there will be the same debate as ever, which is is that actually something that's sensible to be doing for the UK economy? Because are you going to put off dynamic, economically active, talented, wealthy individuals from moving to the UK, which is part and parcel of making the UK a global financial centre, making UK economically successful, and so on. I do think that you need to have some form of entry system, a way of a stepping stone to becoming UK resident, a full UK taxpayer. I think if it is as blunt as you move to the UK and you just, all your worldwide situation automatically becomes within the scope of the UK tax system, that is going to be a disincentive to some people moving to the UK.
Now, yeah, that's a good point, actually. Isn't it? A lot of people want to just dip their toes into a jurisdiction first, don't they? Right, and see.
Yeah, and now there's so much competition. You know, other jurisdictions are offering all their own regimes for new arrivals, whether it's Italy, Portugal, and so on. I mean, probably if you look into the details, lots of places in the world will effectively have special rules that apply to new arrivals or foreigners moving to the country, or ways in which things can be structured. There's a perception issue, and I think that also goes hand in hand with Brexit and political uncertainty in the UK, also geopolitical events like the war in Ukraine. It is in the 90s, 2000s, London was the place to be. People from all around the world were moving to London to live, to work, to invest, to run businesses. Some point following the financial crisis, the run-up to changes to the non-dom rules, run-up to Brexit itself, COVID, political uncertainty since COVID, all those things have completely reversed the momentum in terms of the UK being a go-to jurisdiction for wealthy individuals. Now, some people might say, well, who cares? I would agree that countries of the size of the UK should not be really staking their future or really setting their policies on being a playground for sort of wealthy elite. But it goes far beyond the wealthy elite. I think it's internationally mobile individuals in general. Do they see the UK as being a receptive, friendly place to live, work, do business? When you combine with sort of UK immigration policy and all the rhetoric about immigration, if you go back to Theresa May, she made this statement in one of her speeches about sort of deriding these globally mobile individuals who are citizens of nowhere, and going to this much more populist idea of being a true Brit and fully contributing and so on, and which I think 50% of the population of London were born outside the UK, which is an incredible statistic. Only a very small number, very, very tiny proportion of those would be individuals that would ever seek to avail themselves of the non-dom regime, because the vast majority of people are just normal people living, working in London or studying in London. But I think it's all about how foreigners perceive the UK and whether it's a place that is friendly to them and where they are welcome. And I think in the modern global economy, you do need to be somewhere that is welcoming to people who want to come and work in the UK, because UK desperately needs overseas talent at all kinds of levels of the economy, and also to set up businesses and invest in the UK. So I think with the non-dom, rather than what I think I would welcome Labour doing if they do win is taking a slight step back and saying, before we decide to hack at the non-dom regime and make some, probably rather than, what's most likely is that instead of just getting rid of the non-dom regime, they will make headline changes to it to apparently make it more restrictive or more expensive.
And quite often, a lot of the time, they just do window dressing, don't they? So they get the headline for the newspapers, and then there's exemptions in the back door that, like with ATED, ATED with the property, and Conservatives clamped down on overseas people holding UK property in trusts, but then there was an exemption if you rented it out, and which most of them did, and that never made the front page of the papers. So I think sometimes the politicians sometimes understand what you and I are talking about better than we give them credit for. I think sometimes they know that they've got to sort of manage the media, and then when you see the detail, it's sort of business as usual. But I don't know what's going to happen this time. I really don't.
No, I mean, firstly, there's one school of thought where we say, well, does it matter? What would actually be the impact of getting rid of the non-dom regime? Okay, so now we have the statutory residence test. Okay, so for a lot of people, it is now much easier for them to be non-UK residents, even though they spend time in the UK. So historically, UK tax residence was decided by some very vague principles. And for a lot of people, it was difficult for them to be clear whether or not they were UK resident or not. So it was for people who did want to have a home in the UK and spend a certain amount of time in the UK, then to err on the side of caution, they were probably UK tax residents. Now, with the statutory residence test, there are clearer rules, much clearer rules, to determine whether you are, whereby which you can say, okay, if you spent fewer than a certain number of days in the UK, then you're definitely not resident in the UK. If you spent more than a certain number of days in the UK, then you definitely are resident in the UK. There are some then cases in between where there can still be element of complication or lack of clarity or ambiguity. But if I'm a globally mobile, wealthy individual who, yes, has my pied a terre in London or my house, my hunting estate in the English countryside, Scotland or wherever, and I like to spend 2 to 3 months a year in the UK, I can do that, and I can be very certain that I am not UK resident. And then, regardless of the non-dom regime, I'm not going to be paying any UK tax, subject to certain economic activity that I might carry on in the UK, where even if you're non-resident, you pay UK tax. Yeah. But that might, for a lot of people, and I suspect that's what's happened over the last few years, is that a lot of these wealthy foreigners who are perceived as living in the UK probably aren't tax residents in the UK. They spend time in their home country, they spend time in the south of France, they spend time somewhere where it's warmer in the winter.
You're quite right, because the statutory residence test, once it was codified, is fantastic, isn't it? Because I worked with clients who were asking, okay, what's the minimum amount of days I need to be in the UK for me to be tax resident there? And then obviously the other side of the coin is, or what's the minimum that I have to be out, what's the maximum I have to be outside the UK to not be tax resident there? And you can calculate both of those equations perfectly, right? So I think you, as a good point, since they codified it, it's crystal clear, and clients are very good at tracking their days now, and making sure that they don't do any business on the phone when they're in the UK and that sort of thing, right? And they're quite wise to those rules now and their application, and not falling foul of them.
Yeah, absolutely. And also, even if you are a UK tax resident, that doesn't necessarily mean that you need to pay huge amounts of UK tax or any UK tax. So one example would be if you remain resident in another country, then the double tax treaty between the UK and that country may effectively shelter your non-UK income and gains from UK tax. And yes, it probably means you have to pay tax in that other country where you're living, but how much that tax will be, or is open, will depend on which jurisdiction it is. So if people are dual residents and can rely on double tax treaties, even if the non-dom regime is got rid of entirely, the UK could still be perfectly palatable from a tax point of view. Another case would be UK residents who don't actually own much or earn much themselves, but they rely on the wealth of family members or family trusts outside the UK. So if you're the sort of next gen of a wealthy family and you come and live in the UK, you might be receiving gifts from your parents. You might be receiving distributions from family trusts or other structures. And again, there may be limits on how much UK tax you have to pay.
I think the gift tax, well, there is no gift tax, is it? The concept of gift tax is under the inheritance tax regulations, isn't it? So if a foreigner is gifting to a UK resident, I think there would be no tax, would there? So as you say, if there's somebody there who wants to contribute and just to the economy and build a business using what's in the UK, they can be funded tax-free from family members, and that's got nothing to do with the non-dom regime.
Yeah, exactly. If you've got sort of the bank of mum and dad outside the UK, and they're minded to pay for your lifestyle, then there would be no tax in the UK.
It used to be the Russian mother-in-law. Do you remember that? I used to always see that one. The Russian mother-in-law, for some reason, always had a lot of money.
Yeah, and also just I think culturally, in a lot of other places around the world, family wealth is held collectively or by certain senior family members, and they are effectively acting as a trustee or custodian of that wealth for the wider family. But everyone participates in it to some degree, and that's accidentally quite effective UK tax planning.
Right.
Family members becomes residents in the UK.
Yeah, that trustworthy family member is always useful, isn't it? The overseas trustworthy family member. Yeah.
Yeah. So I think, and then another thing would be, like even if they sort of get rid of non-dom regime in its entirety, if you're a non-dom who you've got that your stockpile of clean capital outside the UK, well, going forward, unless they introduced a charge on bringing any money to the UK, which that would, it'd be extraordinary if they did that, then you can live as a non-dom in the UK, and you can bring in your savings as and when you need them. And yes, you'll have to pay tax on interest and dividends and so on those savings outside the UK. But well, that's not always very much money. Often people are quite conservative with their investment strategy as well. So they've got to a stage in life where they've got a few million in the bank. They're not investing it adventurously or aggressively, and they can sit in the UK and live off that money, paying very little tax. So those individuals will not be very affected by it. Also, there are products like offshore insurance bonds, which have nothing to do with the non-dom regime, but are a wrapper where funds can roll up tax-free, and you can take a certain amount of money out of those bonds each year, whether you're a non-dom or a UK domicile person, and not pay tax on that. So
yeah, because that's a good point. A lot of people say that, look, I just want to be in the UK because while my grandchildren are growing up, my daughter lives there. She married a Brit. I want to be there for 5 years. Can I collect my money when I leave? And so a lot of people actually kind of ask for, how can I roll my potentially taxable gains up offshore because I know I'm not going to be there. So yeah, I guess that something like that would be quite useful, wouldn't it?
Yeah. So I think my sort of summary of my view on what's happening in non-dom is that even if there are changes, it may be that as has always been the case, they are watered down, there's compromises, there's fudges, they're not as dramatic as they could be. In an ideal world, I would like to see the UK actually just take a root and branch approach to modernising the way in which it taxes international wealth and new arrivals. But I think that's probably not going to happen. But then in a perceived worst case scenario where they do just abolish the whole of the non-dom regime, I think there's a very limited, and it's quite an elite club of individuals who would be drastically affected by a complete abolition of the non-dom regime. I think for many people moving to the UK, it would make little or no difference. Many people already living in the UK, there'll be ways in which the blow will be softened so it doesn't ruin their life overnight. So I think, and I strongly suspect that those people who would be quite drastically affected by it, there will be, as you say, some back doors or compromises in the way the changes come in, that those people are and their wealth is protected from it to some extent.
Yeah, so I agree with that. I'd be very surprised if they got rid of it entirely. And I think it will be some watering down. Maybe we can talk about the election now, actually, and our conversation on that will explain why we think these things. I think there's a bit of a view that the Labour Party and the Tories are kind of the same. Most of their policies are the same. There's no real difference anymore, if there ever was. There's a view that the Conservatives have really not achieved anything at all in their many years in power. Quite the opposite. The population is sick to death of the political class. We've seen that in other countries in Europe as well, but it's there in the UK. The populace has an opportunity now and again to deliver a slap in the face. They did it in Brexit, and they're going to do it again this time. And Sunak, from what I can tell, he looks like he's quite a capable guy, probably a nice guy, capable, but he's a globalist if there ever was one, and he's just implementing the sort of bigger chessboard and not the chessboard that the normal people are playing on. So I think it seems clear that the Tories are going to get absolutely wiped out, whatever that means, and Labour will definitely be in. And historically, whenever people like you and I who advise people with large assets, you'd be shaking in your boots when there was a Labour government about to come in, wouldn't you? But I think this time, Keir Starmer doesn't seem to be that much difference. But yeah, what's your view on what's going to happen in the election and what that'll mean to people with assets?
Yeah, well, I mean, if you go back to the 80s, let's say, once Margaret Thatcher had sort of settled in and established her way of doing things. Since then, has there been any significant dramatic change in UK political policy or tax policy, or has there just been a bit of meandering and tweaking? There's been a broad consensus and then these things are always cyclical. So I think when we would have been still at school, the Tories went out of power after a long time in power, and their brand absolutely trashed. Tony Blair came in as a sort of acceptable face of centre-left politics and had a good reign, and Gordon Brown, and then comes a stage where everyone's fed up with Labour, and the Tories come in, and then we're now back at the next stage of the cycle. And I mean, I think for the Conservatives, with Cameron creating the Brexit situation, which whatever your views on that, I think meant that some traditional Conservative Party voters viewed Brexit as a bad thing, and also viewed either from a policy point of view or just in terms of the chaos that it led to. So that damaged Conservative support and image.
And he was tainted from his election, wasn't it? Because really he got elected based on that small group of powerful Tories that wanted out of Europe, and he promised them that they would have that sorted out, right? And he gambled. I don't think he was a Brexiteer, was he? I think he thought, I'm just going to deal with the Scottish issue, I'm going to deal with the EU, and he nearly pulled it off, but he didn't. But he was tainted from the day he was elected because he'd done a deal.
Yeah, and also and then just the fact that Brexit happened, and then also that it's been handled so badly since, and government has been so chaotic since. If you think, and COVID was a bit of a sort of different period, sort of emergency law prevailed, but then the chaos since then of Boris, Truss completely tarnished the Tory brand again, took away their reputation for economic stability, and then I think Rishi Sunak, it's a strange one, because I think him and Jeremy Hunt coming in, they did steady the ship, and they are a couple of they should be fairly middle of the road, sensible technocrats who can at least sort of run things. But I think Sunak's problem is that he's still half in bed, or having to kowtow to the populist wing of the party. So it's also unclear, I think, to everyone what his true convictions are. He often trips up in interviews, because I think he finds it difficult to just be himself and express genuine opinions. So I think he's very smart, and he is capable of governing and achieving things, which he's done in steadying the ship with the economy, and also things like with finalising the Brexit situation with Northern Ireland, and now
Northern Ireland's a good example, wasn't there? It was like 1 week where you could see that all his good work in the background came to the fore, wasn't it? Like a load of things had been sorted out, and I thought, okay, look, clearly he's a very capable guy, but yeah, there's a lot of other strings being pulled on that chair, I think.
Yeah, so I think the art of it is that everyone thinks Labour are going to win by convincing amounts, but the other effects of that has been that Keir Starmer has gradually been becoming more conservative, not in the large C way, but in more careful and cautious about what he's proposing to do, because I think they see their victory is within their grasp.
Yeah, just don't screw it up, basically. Yeah.
It's like don't scare the horses, don't screw it up. So they've really a lot of their policy proposals, getting themselves much closer to the Conservatives, to the centre ground, being very business friendly. Rachel Reeves seems to have been very active within the business community in the city, trying to say all the right things. I think that's interesting with some of their tax policies, because with the non-dom thing, with what they've said they want to do about private equity and taxation of private equity executives, that's not going to play well with the city, and I think that's where we might see further rowing back from Labour.
And Hunt in Davos was here in Switzerland at Davos, and was talking about abolishing inheritance tax. But was that just something for the galleries, or what do you think on that?
I say inheritance tax just seems to get mentioned every 3 months, that they're thinking of abolishing inheritance tax, and then a week later there'll be something from the Treasury or Number 10 saying, well, they're not going to abolish inheritance tax because for whatever reason. So I think it plays very well with Middle England, and likes of the Telegraph and the Daily Mail. So it's definitely a good gimmick to say you're going to abolish inheritance tax. And I think it's still possible that will be a play by the Conservatives in the lead up to the election. It might be they feel they haven't got anything to lose. George Osborne once used an inheritance tax change to very good effect to stymie some momentum that Gordon Brown was developing, and to sort of get the Conservative base excited. I think
what's different this time is maybe in those elections there was the bad feeling from the populists was against the rich, but I think this time it's against the political class, isn't it? So I'm not sure. So we're on your side. We're going to tax these horrible wealthy people. I don't think people care about that now, right? They're more like, no, it's you guys that are the problem.
Yeah.
What do you think?
Yeah, and I think there's a general feeling now. Apparently, in fact, most people now are in favour of having more spending on public services, and rather than having cuts in taxation. So tax cuts isn't as big a vote winner as it used to be,
right?
Or it's certainly not unless you are. Yeah, if you can have tax cuts and you can spend more on public services and help people deal with the cost of living and all this.
Trust that, isn't it, James? I remember reading that, and I said to one of my friends as a banker, I was like, "Oh, this sounds a pretty good idea. No, can't see what's wrong with it." He's like, "The markets, Ross, the markets."
Yeah, I mean, I think what both parties are, whatever they might want to do, they're restricted by reality, which is that the UK economy is not performing well. Public services are going to get whatever, even if you said we should cut back public services, we should spend less money on certain things, just the the basic essential public services that people expect there to be are going to, and also the infrastructure of the country. All these councils are failing to balance their books. There is an inevitable need for increased public expenditure. And at a time when there's no growth, where is that going to come from? Now, you can only raise taxes so far, but there isn't much of a case for cutting taxes. I think, because it's not always a question of do you raise taxes or cut taxes. It's more about which taxes do you raise and which taxes do you cut. So you can make the tax system smarter, and you can try and alleviate the tax burden on certain people and take more tax from other people. So there's a careful exercise to be done there, but that's not the big headlines that people talk about with tax. That's something much more nuanced and sophisticated. Fundamentally, unless there's economic growth, tax revenue is not going to increase enough to pay for the public expenditure that's required.
Yeah. So, when you speak to, as you say, there's the foreigners that are in doing normal jobs and contributing, right, and then there's the oligarchs, the big people that are coming on the non-doms and just lounging around in London and not earning or bringing any money in. But then you've got the normal people who entrepreneurs, small medium enterprises. That to me seems like they're the heart of the UK. The UK is quite an entrepreneurial society, and those are the people that are the backbone, and those are the ones that are getting crushed. And I think they're getting crushed on, when you speak to them, it's on the things like the national insurance costs and all those taxes. And it seems like, to your point, if they really wanted to boost the economy, the whole non-dom thing is it's not even important. It's more liberating those type of people to really be able to do business, because there's such a entrepreneurial drive in the UK that I don't think you quite see here in Europe, mainland Europe, and that's kind of the goal that we have, I think, right? British sort of willpower, British getting things done, and drive, and they just need to liberate that, but they don't. They keep squeezing those people, and I think that's really the tale of the UK, right? It's those people that are the heart of the whole country, and they're the ones that are getting squeezed.
Absolutely. I think taxes can be a bit of a distraction. I think it's important. People want to have clarity, certainty, simplicity so far as possible in tax, but then you also want a tax system that doesn't have weird anomalies in it, doesn't create disincentives, creates incentives for doing things in a productive way. But more broadly, away from tax, as you say, it's about how do we make the UK a great place for doing business, for starting businesses, growing businesses, for coming into the UK and investing in businesses, for overseas people trading with the UK, setting up branches, offices in the UK. That's what's going to drive the UK economy. Connected to that is immigration. There's a massive issue that businesses can't employ the people they need following Brexit. Now, in fact, in some ways, the UK immigration policy has become more liberal since Brexit than it was before, partly because, for example, lots of Ukrainians have moved to the UK, lots of people from Hong Kong have moved to the UK, but also the visa system has actually become easier than it was previously. So to give someone a work permit is now easier than it was before Brexit. There are also various new immigration categories for people setting up businesses in the UK, which are all helpful. But there used to be this vast reservoir of young, dynamic European individuals who would come to the UK and would do any job that was going, particularly in sort of service industries, or in the sort of manual labour that Brits sort of many Brits see a business being a bit below them, and so businesses that relied on that labour source really struggling along with everything else that's happening. So I think getting the immigration part right is also going to be important for the next governments to support.
Yeah. Okay. Yeah, that's a very good point. Okay. Well, I think we've pretty much covered everything. I think that the only final thing I might like to talk about is to quickly talk about the whole beneficial ownership registers. Actually, I think that is kind of a little bit tax related, and I think it is probably the most worrying thing for a lot of clients. And then I don't know if there's anything else that you want to add as well. It was
beneficial ownership registers. Yeah.
Yeah, beneficial ownership registers. Yeah. So it was really I mean, where did this start bubbling away? We had I think it did really come out of the UK actually more than anywhere, and it was with the person of significant control registers, wasn't it? That came in the UK, and then
it was going back to David Cameron. It was
always Cameron,
David Cameron.
It was always Cameron. Although there was one a lady politician as well who was really going after the Channel Islands, but yeah, it's always Cameron, isn't it? We can trace all our woes back.
Margaret Hodge, perhaps.
Margaret Hodge, yes.
As Labour. Hodge. She
just had she had a bone, a beef with the Channel Islands, so she was for some reason really being selected to drive that. So then you had the persons of significant control register come in the UK. You then had the UK company register becoming public, and then you've had the pressure on the Crown dependency jurisdictions to put registers in. And they really paid lip service to that. And I think we're hoping it was all going to go away, or Margaret Hodge would lose their seat and just disappear. And they were like, oh yeah, we'll definitely do that. Don't worry, we'll get it done. And then of course what's happened is we've had this case in Europe, which has said, well, no, actually this is going way too far and is a clear breach of data privacy rights for people. And then you've had jurisdictions like the BVI go, okay, yeah, well, we're scrapping what we said because the EU have said that's illegal. So everybody sort of sighed a bit of a sigh of relief, but I don't think the matter's quite over yet. And I think this is probably the most worrying thing for a lot of people, right? Is if those registers were to be publicly searchable and open, especially when they've even talked about doing them for trusts. But what do you see sort of happening in the UK? Because really, this is all coming out of the UK, I think.
Yes, so I think for whatever reason, David Cameron thought that this transparency was a good policy for him to be able to sort of take leadership and ownership of on the global stage and achieve something. It's very much framed as being an anti-corruption initiative. The UK steamed ahead with the persons of significant control, so that we've always had UK company registry. You can find out who the shareholders of a company are, but very often shares are not registered in the name of the true beneficial owner. They might be registered in the name of a nominee or a trustee, and so it was possible for people to keep from public their ownership of companies. And then similarly with land, historically, yes, we've got a land registry that you can search and you can see in whose name is the legal title to land registered. But again, that is not always the true beneficial owner of the land. It could be held by a nominee, it could be held by a trustee. Also, if the land was owned by a company, then if you don't know who owns the company, you also don't know who the beneficial owner are. So I think what's come together in the UK is that now, in theory, you have to put the identity of the true beneficial owner of companies on Companies House, and you also now, where you have a company which owns land in the UK, it also has to register with Companies House. Even if it's a foreign company, it has to register with UK Companies House and say who its owners are. There's still some, it's not always the case that you're going to be able to see who the owner of a company is, or who everyone who has an interest in the company. And also where there's been trusts and nomineeships involved. Again, you haven't yet been able necessarily to see the beneficial owners, although some further changes have come in to mean that more beneficial owners are going to have to put themselves on the registers.
It's pretty broad, isn't it? You can even get the financial statements off, and you can also see the history. So even if you want to change to take your name off and put somebody else on, that history is still there. So it's quite wide open, the company registry in the UK, I think.
I mean, I think there's a sort of philosophical question of how much this information should be public or not. So, with land, there is an argument that the country should know who owns the land in the country, or you should know who your neighbour is. So there could be, arguments on that.
Yeah, and I think most people are sympathetic to that one, aren't they? It's the key resource of any country, and I think most people are sympathetic to that. But what they don't want is their private family, their family money. It's not even. I don't think it's even the corporate. Sometimes it's more the family stuff, isn't it? That should not be. Some YouTuber can go and do a big search and find out, who owns what and this and that, and stick it all over the internet, right? I think that's the concern.
Yeah, well, then there's also I think you have different categories. So then you have at the other extreme, bank accounts, where with FATCA and CRS, information about individuals and their bank accounts is being distributed around and shared around the world. Now, that information is not publicly available, but people still see it as a breach of data privacy and creating a risk to them, either hacking risk or misuse of that information by governments sort of against their own citizens. So there's ongoing legal challenges to FATCA and CRS as being a sort of fundamental breach of privacy. And I don't think many people in the UK would think that they have a right to see the details of everyone's bank accounts. And then in terms of whether the government should be able to see the details of people's bank accounts to make sure that they're not money laundering, not evading tax, there's probably a bit of a divide of opinion. But I don't think anyone would think that information should be publicly available, and there's no suggestion that it will be. And even it's the sharing among governments is being challenged. On corporate beneficial ownership registers, as you say, there's been this decision in the EU that it is a breach of EU law for beneficial ownership of companies to be publicly available. So far, this decision seems to be largely being ignored. And the UK, which of course now left the EU, but UK law still is a reflection of EU law, because we've carried over EU law into
Yeah.
UK law. It hasn't been changed. So if that EU decision was right, then it should be right in the UK as well. But there hasn't yet been any suggestion that the UK is going to row back on what it's done with beneficial ownership. Some of the offshore jurisdictions are, I think, trying to create what they think should be the new normal by saying, okay, yeah, we are going to have require you to file information about beneficial ownership, but it will only be available publicly when there's a legitimate interest in someone having access to it.
Yeah.
But where that includes journalists, investigative journalists, that seems to me to open up a huge grey area and a risk to people's data.
Yeah.
So probably, even if that's where we end up, which is that information is disclosed to the authorities and then is only available to others if they have a legitimate interest, that's going to still leave some people very uncomfortable about the privacy of their information. But it's probably the reality that they're going to have to live with.
It's interesting when you look at these hacks that have happened and these big data leaks in the offshore world. The hackers, they don't go for the head office in London or the head office in Switzerland. They always go for the branch in some little island, right? So yeah, there's information that's going to be all stored centrally somewhere in the BVI and all that.
Yes, and I mean obviously
target, right?
Panama Papers, all of these different leaks, and I forget the names of all of them now because we've had a few. Yeah. They've, regardless of the legal position on beneficial ownership, those hacks just blow a massive hole in it anyway. So,
although what was I thought was it the last one, the Paradise Papers, actually kind of fizzled out, didn't it? It didn't really bite. I think most people were like, yeah, old news, heard of that before. I think a lot of clients were pretty angry, I think, with our industry for not sticking up for the clients, which I think it's been pleasing to see on the beneficial owner register that there have been some lawyers like the Philippe and Miscondurea who have sort of led the charge against this and stuck up for the clients. But I think on a lot of those data leaks, clients were a bit like, my stuff's all out there anyway. And so it was quite interesting. It didn't have quite the effect like the Panama Papers and the one that came out of the Appleby leak. But yeah.
Yeah, I think there wasn't anything particularly scandalous that was revealed or newsworthy, so it fizzled out.
Yeah, exactly right. So I mean, maybe that's a bit of good news that there's kind of not. Maybe that might motivate these journalists less, right? They're not going to get quite the headlines that they used to, right? So I think something happened that week when it came out as well. That was, what was that, September 21. I think that it was bad timing as well. There was another big piece of news that came out, but they were a bit unlucky with their timing. But yeah, so yeah, okay, well, yeah, I think that just to conclude maybe on that, probably the whole public beneficial owner register things disappeared offshore. Probably could see the UK maybe pushing it. We've got the Corporate Transparency Act in the US happening, but again, that's a private register. But even now the Americans are now recording names. So it's a sort of very, very small trend. It's not really something that's moving very, very quickly, I think, is it? So it's probably not something.
Yeah, but I suppose that's the other notable trend, though, over the last few years is the fact that the US has not shared its information with other jurisdictions. So US has not joined CRS. US has FATCA to gather everything from around the world. So the use of the US as effectively an offshore secrecy jurisdiction is definitely a phenomenon that's happened.
Yeah, staggering.
And
Although I did read that I think they've signed agreements with some of the Latin American countries now, like Argentina,
okay.
to exchange data on those individuals. So with the Latin countries, maybe that's changing. So maybe that will continue with other places. I know Switzerland's been has put pressure on America a few times, saying, you know, we need to see information on Swiss residents as well. And I think I think they are amending the tax agreement, the FATCA agreement, model agreement, to add some sort of information flowing back, or maybe on different topics. So I think, yeah, America is under a bit of pressure to send information back as well now.
Yeah, and people also have to decide that America is a jurisdiction where they want to place their wealth, structure their wealth, have the Americans knowing about their wealth. So
I always say about America, it can work very well, but you have to know what you're doing. You have to know what you're doing, because yeah, you can get in trouble pretty quickly there. So I wouldn't normally recommend it unless somebody's got a clear rationale and understanding. Cool. Okay. Well, maybe we can wrap this up. What would you say sort of concluding remarks then on the UK for people?
I think on the UK, it's all waiting to see on the election, but hopefully the changes won't be as dramatic as some people suggest, and yeah, in fact, it could be positive. If there is a comprehensive victory by one side or the other, which is far more likely to be Labour, and if Labour is moderate, as it seems like it will be, then I think a period of stability and long-term planning could be exactly what we need. What I would also hope for is on some of these issues like tax and the economy, rather than just rushing to tweak specific areas that get headlines, they take a step back and think about what is it that will make the UK a great place to do business, that's going to drive growth, and get some of that dynamism back that historically London and the UK have been well known for.
Yeah. Cool. Okay. Well, thanks, James. Yeah, no, but it affects us all, right? I think London was the amount of flights. I remember being in Geneva Airport one day. There was about 6 flights landing at the same time from London at one point, and so we were sort of benefiting from London, whether that was all cheap Russian oil or whatever. A lot of Russian business, obviously, yeah, no, I think a strong London is sort of good for all of us, really. So I think a lot of people would love to see England get its sort of mojo back, right? Britain get its mojo back. So yeah, cool. All right,
Okay.
time. Cool. Right.
Thank you.